October 2021 live option trade alerts. In this video, we are going to go over the trades that I send to my students in WhatsApp. And if you want to take the 7-day trial, it's only $19 at beststockstrategy.com/memberships. Again, the 7-day trial is only $19 at beststockstrategy.com/memberships. October 1st, futures market was down almost 40. Now it's up 12. We have a lot of Alibaba positions expiring tomorrow. New opening trade in Apple. Then I give the spread leg. Volatility fell 6% that day, or it's down 6%. Closing trade for Apple made about 35% in just a few hours. S&P was up 50. VIX down 9%. We had a few BABA positions expire worthless. October 4th, sold some calls on Tesla. Apparently there was an issue with WhatsApp on October 4th. S&P down almost 57. Volatility spiked up. VIX was up about 9%. October 5th, sold some calls in Zillow. Adjustment for Z. Alibaba, sold 2 calls to reduce the expiration by 1 week. Facebook, closing trade. The original is there. About a 60% profit. Closing trade, closed for a decent profit. Opened it yesterday and closed it today. S&P up 45. But it sold off heading into the close. S&P is down 20. Sold calls on Amazon. MasterCard closing trade. Originals are above. Sold for 74 cents and bought back for 28. Rolled in Alibaba by 1 week. Alibaba and Zillow are up. S&P up 18. So it looks like that was a turnaround day because it was down around 50 and then it closed up. October 7th, puts in Amazon, new opening trade B plus grade. This would be the 3rd straight up day. Facebook, new opening trade. Then I give the spread leg, closing trade for Amazon. The originals are below. So adding up the credits, we made almost $2,000 on that trade. Let me see if I can... So 1, 2, 3, 4. There are the trades. Facebook, B plus grade. S&P up 36, but 30 points off its high. VIX down 7%. All right, PayPal, we bought that back. Closing trade, original is below. Around a 60% profit. Zillow, bought back the October 15th and sold the October 22nd. That was a bad trade. I definitely should not have done that. And that actually caused some problems later on, unfortunately. Closing trade for Adobe. Closing trade for Adobe, around 60% profit. Closing trade for PayPal. That was the original, about 80% profit. MasterCard closing trade. Sold for $240 and bought it back for $14. Closing trade for UNH. Closed for around a 75% profit. S&P down 8. VIX down 4. And VVIX about even. October 11th. So here I flipped Alibaba, which I also shouldn't have done, but thankfully that trade ended up being profitable as I closed it out in November. I closed it out when Alibaba was trading at about 168, and that was actually pretty fortuitous. I just didn't want to hold it through earnings, but in hindsight, that was also a bad trade. Although I did pick up like $240 of incremental credit, and I made a decent amount of profit on Alibaba. Was it worth it? Probably not. Actually, definitely not. Definitely wasn't worth it. But it's always good to make money, I guess. It just, going back to the Alibaba thing, it is always good to make money, but it definitely was not worth the stress. So I don't believe I will trade Alibaba again. Let me see what I've done, something different. So I bought back the calls, and then I sold the 145. I mean, Alibaba, at the time, this was actually a good trade because Alibaba, I think, went up all the way to like 182, if I remember. So putting myself in my shoes, because I bought it back when Alibaba was trading at 168, and then I remember when Alibaba went up to over 180. So, realistically, at the time, this was a good trade because I definitely don't want to hold it and then have it go up tremendously and then become in the money. And then if I rolled the calls, and even if I rolled the strike up to about like 170 or like probably 172 and a half if they even had that strike, but let's say I rolled it to like 170 and rolled out the expiration by 1 week, then if I was short those calls when Alibaba went up past 180, that would cause some anxiety. So I think at that time, that was actually a pretty decent roll. I think that the biggest mistake I made there was I just should never have traded Alibaba. Amazon, that's a great trade. Pick up $320. Then I give the spread leg. Then I give the open order on MasterCard. I expanded the Amazon position, picked up over $400. S&P was down 30. Then I'm saying in hindsight, I probably should have left Alibaba alone. It's gone up 20% in 3 days. October 12th, Facebook, new opening trade, B plus grade. Closing trade. So I sold it for 87 cents and bought it back for 17. Facebook representing A minus opportunity. That's really good. Caterpillar. I don't know why I traded that. I rarely ever trade that. I just thought it was a good opportunity. I mean, that's a decent amount of premium for selling the 150. Caterpillar tends not to move that much. BLK. That was a good trade. Probably should have been a little bit more aggressive on the strike selection there. So closing trade for BLK. Original is above. Sold it for $1.85 for $185. Bought it back for $30. Made about $300 total on that trade because I sold 2 contracts. So October 12th, I was thinking about selling the $1,100 strike on Tesla. That would have been a mistake. And I'm very, very careful when I sell calls, extremely careful. And I just had a gut feeling that I wanted to wait to make sure that Tesla was overextended. And then I remember, like, just a week or maybe even potentially a few days later, I could have sold like the 1500 call on Tesla and brought in a decent amount of premium. S&P down 10. October 13th, closed out BlackRock. It's funny. I think BlackRock was actually started by a guy who went to my high school, Robert Capito. So it's actually kind of ironic. And I think maybe like his parents or one of his family owns like Capito Tires in Liberty, New York. But yeah, it's just kind of weird how like the world is really small. Close for 50%. And actually, when I interviewed at BlackRock, when I graduated from Cornell, I think at the time, I was trying to like memorize all these digits and stuff. And at the time, it had only like $383 billion in assets. And now it has like trillions of dollars in assets. So BlackRock closed for 50% profit. MasterCard, Visa, B plus grade, S&P up 13. Okay, October 14th. So then I flipped around. Zillow, I bought back 5 and then I sold 3. That was a big mistake. Yeah, for sure, that was definitely a big mistake. And I mean, it'll work out okay, but now I'm trapped in Zillow for a decent amount of time. MasterCard, closing trade, original is there. Sold for $1.30 and bought back for 40 cents. S&P up 74, VIX down 10%, but VVIX was not down that much. October 15th. So actually, okay, so just to be, okay, so if I bought back Zillow here on October 14th and then I sold the November 26th, then the reality is that I remember previously where I think I was short like the October 15th expiration. So if I had to buy back the 98, which expires on October 22nd, then at the time it probably was a decent roll. So Zillow did not accommodate me, and I think it was a 96, it probably would have ended up expiring in the money, unfortunately. So I mean, who would have known that Zillow basically would have been cut in half in just a few weeks later. All right, October 15th, S&P up 20. Alibaba is up over $1. Facebook, new opening trade. Facebook. We have a large amount of Amazon positions that we put on in August. So bought back the Amazon position. The original is there. Bought it back for $2, sold it for $1,200. So bought it back for $200 and sold it for $1,200, $1,000 profit. S&P up 33. Hit a new year-to-date high. S&P down 16. Zillow's down 10%. Closing trade for Amazon. Sold it for $540 and bought it back for $95. Kept 80% of the premium. Disney's a decent opportunity. Facebook closing trade filled at 39 cents. Opened last week for almost $1, so a 60% profit in less than a week. S&P up 15. Facebook was up over 3%. Zillow was down another $9. Today we close out Amazon and Facebook. You know, it seems like Zillow sold off tremendously. I really think that people knew what to expect about the earnings before it actually happened, because Zillow was up to about 104, and then in just a few days it dropped about 20% prior to the earnings announcements. We have a bunch of positions on, and all of them are fine except for Zillow. Okay, October 19th, Alibaba. We bought that back. November 5th. That was actually good that we bought that back. Closing trades. Made a decent amount of money on that. Although a lot of that premium was allocated to rolling the positions. I'll try to close out the remaining 4 positions after Baba reports, but actually I closed it out before, which was smart. Amazon. I just had too much buying power, so I wanted to make that trade. Closing trade on Facebook. Sold for 91 cents and bought back for 18. Trading at a year-to-date high. The issue now is that I have a ton of available buying power, but I don't want to force trades, especially with a low VIX. S&P up 33. Facebook, Apple, and Zillow all up around 1.5%. Alibaba was up around 6%. Zillow and Alibaba are up. Yeah, it's good that we flipped it. Well, I guess at that time it was good that we flipped it. Still, even if we make money from it, was it worth it? No. Some things are not worth the stress. Okay, October 20th. Sold the 215. New opening trades. All right, obviously these trades ended up getting challenged, and I've had to manage them. I'd probably have traded PayPal 2 to 3 times larger if volatility was higher. I mean, that wouldn't have been bad, because you would have, if volatility was higher, then I would have collected significantly more premium for it. PayPal, new opening trade, B plus grade, S&P up over 16. Then I expanded PayPal. Now all these trades, well, not all of them, but I ended up managing the 210, A minus grade, MasterCard, Baba and Z are up. Tesla is up $21. We're currently trading at a year-to-date high. With Zillow and Baba no longer in danger, we are back on track to not have any losing trades this year. I believe Zillow and Baba are about even on the year. And with time decay, they eventually show a profit. Definitely should have closed out Zillow then, but sometimes the market just has a move that where the actual move is more than the expected move. And when you trade and you sell options that are pretty far out of the money, you can win up to like 98% of your trades. That doesn't mean that you're going to win 100% of your trades. So you have to learn how to minimize your losses and how to roll and manage your positions for the few percent of the trades that end up getting managed. I mean, that's just what you're going to have to do if your goal is to be consistently profitable. Less stress equals more happiness. S&P up 13. Tesla was down almost 6%. Zillow was up almost 4%. PayPal is down over 10% in 2 days. So I don't expect it to fall significantly more. I was wrong. We hit a new year-to-date high today. October 22nd. Facebook. Those were good trades. PayPal is up. So October 22nd. Baba and Z are profitable as well, so we're back to having no losing positions for 2021. That should have been, when you have underlyings that are not core underlyings like Alibaba and Zillow, PayPal is a core underlying, but something like Alibaba and Zillow, which I traded it pretty small and it was just like a decent opportunity at the time. I should have closed it out at that moment. Now I did close out Alibaba for a profit, but Zillow is a pain in the butt. Zillow, that expires today. Okay. Closing trade for Visa, closed for a 60% profit. That's going to expire for about a $695 profit. Open up a trade in Amazon, picked up about $190. During periods like that, I'd rather be early and have a small opening, start a trade go against me so that I can add more than miss a trade entirely. Decent opportunity. Amazon and Facebook. VIX is up around 4%. S&P up almost 14. PayPal is up a lot and it's showing us a nice profit for the day. However, our existing positions are not showing enough profit for me to want to close them out right now. To be honest, PayPal is a core underlying and I never would have expected it to fall as much as it did. So I don't necessarily think that was a bad trade to let theta decay work in my favor. I think that what I should have done was close out Zillow when it showed a profit because it's not a core underlying. And but besides that, I don't really think I made a mistake with PayPal. I definitely made a mistake with Zillow for not closing out early, but PayPal, it just traded way below. It just traded way below what I anticipated. So, all right, Caterpillar. Closing trade original is below. Facebook. Amazon reports earnings this week. Tesla up. PayPal up. Facebook up. Zillow up. Sold it yesterday for 63 cents and bought it back for 5 cents. Okay, so I did sell the 1500 call on Tesla. Picked up $455. Then I bought it back like 7 minutes later. All right, whatever. It is what it is. Made a decent profit. New opening trade, B plus grade. Sold it for 87 cents and bought it for 15. Closing trade, closed for 23 cents and sold for 84 cents. Closing trades on Amazon. Profit of around $700. Open up another trade on PayPal. S&P up 8. Amazon up 56. Tesla down 6 after being up around $70 earlier in the day. October 27th. New opening position on MasterCard, Visa, B plus grades. New opening trade, B plus grade. Closing trade for Facebook, closed for 50% profit. Okay, S&P down 23. PayPal down over 3%. New opening trades B plus grade. New opening trade B plus grade. All right, so I closed out Zillow for a profit. Actually, that was smart for closing that out. So now the only Zillow trade that we have left are the 3X 83 strikes November 26th expiration. I should have closed that out. It was a big mistake. I mean, it was still smart to close out the November 19th 280, or November 19th 80 strike rather, not the 280. All right, October 28th. Closing trades for Facebook. So new opening trades for Visa. B plus grade, maybe even an A minus. S&P up over 44. October 29th. New trades in Amazon. Closed out the call positions in Amazon for an 80% profit. New trade in Starbucks. I don't think I've traded that in a really long time prior to making that trade. B plus grade. S&P up 9. Tesla up 3.4%. PayPal down 1.8%. Zillow up over 5%. November 1st. Oops. Okay, so that's November 1st. So I bought back Starbucks. All right, so that's it for October. Let me know if you have any questions. Leave a comment below. Please like, comment, and subscribe. Click the notification bell as well. And again, if you want to join the 7-day trial, it's only $19 at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships.